$3.7 billion for a glass company. Private equity is officially bored of software. They just want to make Windows.
Solar and automotive glass, Nate. Apollo is not buying a hardware store. The industrial cash flow is massive.
I am just saying heavy manufacturing is the new SaaS, unless you count Netflix quietly buying Ben Affleck's AI startup.
Wait, Affleck has an AI startup?
Had past tense. But before we grade Hollywood's tech dreams, we need to see how Apollo plans to pay for all this glass. The rundown. I still can't picture an Idris Elba-backed meal replacement shake fitting into Danone's yogurt empire.
Well, they just paid 1 billion euros to make it fit.
€1 billion for powdered nutrition. It feels very 2015 to me.
Actually, if you look at Danone's recent moves, this tracks perfectly. Analysts are pushing hard for portfolio shifts right now. Danone wants to simplify the legacy stuff and grab instant Gen Z market share. Huel does exactly that.
Sure, but let's talk about actual healthcare, not tech bro smoothies. Olympus Partners just flipped the retina business of EyeSouth to Cencora. $1.1 billion.
A very clean, highly specific carve-out. And right next door, Gilead is dropping up to $2 billion for Ouro Medicines to expand their inflammation pipeline.
Up to $2 billion. You always catch that up to phrasing?
I do, because I guarantee tomorrow's SEC filings will show a massive portion of that payout is tied to clinical milestones. Nobody just hands over $2 billion in biotech right now without a safety net.
Well, Goldman Sachs thinks everybody will be handing over cash soon. They just put out a note predicting a massive M&A surge for 2026. They're pointing to rate cuts, AI capital investment, and a softer regulatory environment.
Oh, come on.
What? The logic is sound. We're seeing the dry powder pile up.
It's Goldman Sachs predicting a surge in banking fees. That's not a forecast, Nate. That's a wish list. They're just trying to sell hope so their associates don't quit.
You're so cynical.
I prefer data-driven. Look at the new Stepstone data. The actual high internal rates of return right now are coming from early-stage, middle-market debut funds. That's where the smart money is, not massive corporate tie-ups.
Fine, but you can't deny the AI capital wave. Even Netflix is doing AI deals now. They just quietly bought Interpositive.
Wait, really? Ben Affleck's AI filmmaking startup?
The very same. Hollywood theater meets Silicon Valley term sheets.
I desperately need to read the footnotes on whatever Affleck negotiated there.
Good luck with that. But if you want a massive deal with actual physical assets you can touch, we need to talk about Apollo. $3.7 billion for a glass company.
Nippon Sheet Glass, heavy manufacturing take privates are officially back. The big one.
You look at a deal like this and you just have to respect the absolute lack of glamour. Apollo is out here buying sheet glass while everyone else in the valley is trying to acquire AI startups.
$3.7 billion for Nippon Sheet Glass. That is a massive take private for something that literally just sits in window frames and car windshields.
Don't forget solar panels. That's the kicker here.
Sure, solar is the sexy part of the press release, but I read the actual footprint. This is heavy, heavy manufacturing. You're talking massive furnaces running 24/7. The capex is terrifying.
Which is exactly why Apollo wants it. It's a classic tangible asset play. You can touch it, you can model the cash flows, you can lever it up. It's beautiful.
Beautiful? Nate, look at the margin profile of architectural glass. It's a brutal commodity market. You're telling me Apollo is going to squeeze enough juice out of a legacy Japanese manufacturing business to justify a $3.7 billion enterprise value?
Yes, because they aren't paying software multiples. They're buying global market share. NSG is an absolute giant. You consolidate the operations, trim the fat, and ride the green energy wave on the solar side.
I'm looking at the debt markets right now and wondering who is financing this at a rate that makes the math work. The interest expense alone on a leveraged buyout this size is going to eat their operating income alive. You can't just slap a green energy narrative on a glass furnace and pretend the debt is free.
Come on, Maya. You just have to look through the noise. The value is completely transparent.
Oh my God, you did not just do that.
It was right there. I had to take it.
You know, you sound exactly like a first-year associate trying to make the managing director laugh, right?
I'll take that as a compliment. But honestly, this fits right into what Goldman Sachs was putting out this morning. They're calling for a massive surge in M&A by 2026.
Right. But Goldman is blaming that on monetary easing and a better regulatory environment. Buying a Japanese glass company is just old school private equity doing what old school private equity does. They're hunting for cash flow because they can't rely on multiple expansion anymore.
Exactly. They're looking for heavy industrial assets that public markets hate. It's the same reason corporate carve-outs are accelerating. Companies want to simplify their operating models, so they dump the unsexy stuff onto private equity.
Well, unsexy is definitely one way to describe sheet glass, but sometimes simplifying your portfolio means selling off something highly specialized, which brings us to a totally different kind of vision play.
Wait, was that an eye pun?
I have no idea what you're talking about, but Olympus Partners just handed over the retina business of EyeSouth to Cencora for $1.1 billion. Voices.
Goldman just put out this massive note predicting an absolute surge in 2026 M&A activity. They are pointing to monetary easing, all this AI capital investment, and my personal favorite phrase, a more balanced U.S. regulatory environment.
Balanced is doing a tremendous amount of heavy lifting in that sentence.
It is pure banker speak for, we really hope the FTC stops blocking our deals so we can buy new boats.
Exactly. But I actually read the Stepstone data that dropped right after the Goldman note, and I think the big banks are looking at the wrong end of the market.
How so?
The mega deals are still stuck in the mud, where the actual returns are happening right now. Debut and early stage funds focusing purely on the middle market. Stepstone shows these smaller funds are absolutely crushing the mega cap guys on internal rates of return.
Oh, come on. You cannot tell me the big boys are not about to feast. We are seeing corporate carve-outs accelerating and everywhere. Every bloated consumer company is suddenly trying to spin off their pandemic mistakes to unlock capital.
Sure, carve-outs are happening, but investors are literally fleeing the brand name mega funds to back emerging managers because the math is just better on a $200 million deal than a $20 billion deal.
Okay, calling them emerging managers makes them sound like indie bands. But you are ignoring the AI capital wave Goldman is tracking. It is not just middle market software anymore. It is infrastructure. It is energy. It is massive scale.
I am not ignoring AI. I just think the valuations are completely hallucinated right now. Show me the cash flows, Nate. Until then, it is just corporate theater.
Spoken like a true skeptic. But speaking of massive scale and deeply unsexy industries that actually generate cash, we need to talk about what Apollo is doing over in Japan.
$3.7 billion for a glass company. Spill the tea.
I'm just picturing Ben Affleck sitting in a conference room with Ted Sarandos pitching an AI startup.
Interpositive. The name alone sounds like a parody of a Silicon Valley fever dream.
Netflix bought it quietly, but you know this is pure Hollywood theater meeting tech desperation.
I actually hate this deal. Show me the code. I guarantee you there's zero proprietary tech there. It's just an acqui-hire for a famous face so Netflix can say they're doing AI.
Hold on, I completely disagree. Netflix doesn't need Ben Affleck for PR. They need a bridge to the creative community who is terrified of AI right now. If Affleck is the ambassador, it suddenly softens the blow for directors. It's actually a brilliant strategic hedge.
A brilliant hedge? Nate, come on. It's a vanity project. I checked their incorporation filings. They barely existed for a year.
Fine, but speaking of weird flavor combinations, the rumor mill is screaming about Unilever and McCormick.
Active talks to merge the Unilever food business with McCormick.
Marmite flavored Old Bay. Just think about it.
Please don't make me think about that. But look at the structure here. This fits exactly what analysts are saying right now about corporate carve-outs accelerating. Unilever wants to simplify its operating model. You spin off the food division, merge it with a spice giant, unlock the capital, and go back to focusing on soap and deodorant.
It makes total sense on paper. I just want to know who gets the naming rights.
We'll see if it actually crosses the finish line. Speaking of crossing the finish line, I'm spending my evening digging into some fresh SEC filings.
Oh, the Gilead and Ouro Medicines deal?
Exactly. $2 billion is a massive headline number, but I want to see exactly how much of that is locked behind clinical milestones. We'll tear into those exact structures tomorrow. Tomorrow's radar.
We have to mention the rumor that Netflix quietly bought Interpositive. Just another AI video startup, except this one was founded by Ben Affleck.
I'm desperately waiting for the filings on that just to see his consulting fees. But tomorrow my eyes are glued to Gilead. We finally get the SEC docs on their $2 billion Ouro Medicines acquisition.
Right, the milestone structures? You think they tied the payout to FDA approvals?
Has to be. I bet at least $800 million is locked behind clinicals. Speaking of wild bets, did you see Goldman predicting a massive M&A surge for 2026?
Driven by rate cuts and AI capital, I completely buy it. The pipeline is bulging.
You always buy the banker optimism. 2026 is a lifetime away. They're just trying to keep their analysts from quitting.
Hey, hope is a perfectly valid retention strategy.
It really isn't. Also, watch Perfect Corp tomorrow. We'll see if that going private proposal is actually serious or just a fishing expedition.
I'll bring the coffee, you bring the highlighters. Catch you next time.